Lance Ippolito here. I want to go over earnings that we had from big tech this week. We actually have Apple after the close, and I'm very, very interested. I love earnings. Obviously, this earnings quarter has been a little screwed up, you can say, with the coronavirus obviously affecting companies and guidance. But a couple of names I'm looking at here is, number one, Facebook. Now, this was Facebook and Microsoft were very interesting yesterday, as they actually said they saw minimal impact from the coronavirus. Again, this is the previous quarter, so we don't know how it's going to go for the next quarter earnings. But one thing I want to look at here is, in Facebook, the stock is up about $9.30, but let's actually drill down to the after hours print. So after hours, what happens is when a company reports earnings, those Bloomberg terminals, those machines, they get the transcript and they have buy and sells based on it. So if they beat by EPS, if they beat by revenue, the machines act. That's why you have, like, why did Facebook go down really quick and then it went straight up? It's just machine trading, so they pick off retail traders like us on our orders, especially if we have stops. So the stock traded up a big range. Look at that, from 188 to 217 after hours. Again, fantastic report by Facebook. And as you can see here, Facebook now at 203. So the stock is off the highs massively, right? About 14 bucks. And the market makers, the reason why on this is the market makers are not going to lose money. So you may be thinking, Lance, dang, Facebook up 9 bucks. I wish I would have bought calls. I would have crushed it. No. If the stock was around 210 or higher, yes, you would have. But let's actually go to the Facebook option chain here, just so you could get a visual here. So I'm going to go to Facebook and the weekly option chain. So usually when people trade earnings, they isolate the earnings event with the weekly options. The implied move in Facebook, I believe, just trying to remember yesterday, was somewhere around 13 bucks or so, $12 to $13, and it's up 9 bucks. So you can see here, if you bought in the money calls, you did make some money, right? Let's say you bought the 200 calls, you're up 20%. But if you bought in, what most people do because they don't want to buy expensive calls on earnings, is the out the money calls, the 205 calls are down 15%. The 210 calls are down 57%, even though the stock is up 9 bucks. Similar story here in Microsoft. This is why earnings can be so difficult to trade, and the market makers are going to keep these names within the market makers' move. So Microsoft, fantastic report. One of the best reports I've ever seen. Up 10 bucks on earnings. Today it's flat. Look what happened to the price of the calls and the puts. The calls are down. They're crushed, 84%, 90%, right? Big time crushed. The puts are all crushed, obviously, too, because the stock is, well, now it's only up 17 cents. And then even Tesla, okay? Even Tesla is up $26 on earnings, 50 bucks. 60 bucks from the high after hours here on earnings. And guess what happened to the price of the calls on Tesla? These things got crushed. Even the in the money calls. Look at these calls, down 60, 50, 30%. So what happens is on earnings, the market makers have an implied move. If the stock goes beyond their implied move, the call buyers, or the put buyers, the option buyers, I should say, get paid. If not, the market makers who sold you, usually the retail trader, those options, they get paid out there. So I do like seeing that names are getting sold off on earnings, even though they're reporting good numbers. They're not rewarding and causing these massive short squeezes. One thing I want to point out before the video ends, and again, we do have Apple after the close, is something that really caught my attention, and I wanted to bring this to everyone here at Wealth Press. EWY is the South Korea ETF. Now, the EWY, one thing I want to just throw out there, and we could get into theories all we want and have many conversations, is originally when people have bought EWY puts, we call them the Kim Jong-sun Gum put buyers because Kim Jong-sun, probably getting his name wrong, over there, Supreme Leader, as they call him in the movies. He's been rumored to be ill, even death a couple days ago, and no one's really heard from him. So people were buying puts, and if their leader is deceased, obviously the stock market would probably take a hit. Another thing is, and this is why I want to bring it back to earnings, is Apple. reports earnings after the close. Now, Samsung, which makes up 20%, actually over 20% of the EWY, the South Korea ETF, they had a pretty poor earnings. They cut guidance. Revenue was light. Their earnings were not good. So we do have Apple after the close today. Now, is Samsung Apple? No. Are they correlated? Yes. So I'm a little skeptical on Apple's earnings. I think unless Apple has the best quarter ever, which they can, I think you may see a little bit of volatility in that stock moving lower, therefore dragging the stock market lower in the days to come, specifically tech names. So keep an eye out. I just want to bring this video to everyone and to the attention. Actually, before we go, Lance, you're rambling on, but I want to give you guys some value. Apple, the implied move on earnings, and you could send me an email saying, Lance, you're fantastic or an idiot, depending on what Apple does on earnings. The implied move in Apple is about $11. We see it right here, MMM, or you can add the at-the-money calls and the at-the-money puts. So the at-the-money calls right here are $6. We'll say $6.10. The at-the-money puts, the 290 puts, are about $6.80. So we're getting about a 12. We'll say we'll just round down and we'll say a $12 move on earnings. And market makers implied move is about $11.25. So we'll say $11-12 on earnings there for Apple. That's the implied move between now to Friday or May 1st expiration. Keep an eye out. I think we see Apple move lower on earnings just because of the Samsung report, but we'll see after the close today. Thanks, everyone.